Hope you all are doing well in the name of God, and what you see on the screen are the results of the past few months of the system that I'll be exposing. And to be precise, the system works really well in Bitcoin, silver, and gold. And the only reason why most retail traders, including you, won't be able to experience the profitability that you could is because trading is a game of math, mind, and market understanding, which crushes the brain if all done manually. For escaping the retail trap, I've built my custom trading algo, which eliminates almost about 70% of repetitive decision making, which has not only reduced my stress, but has also incredibly boosted profitability of me and every other user. So let's straight away jump into it. Now, before understanding about the system, first you need to understand the concept of ICT and volume being used in it. So we have used ICT in this model to make it systematic, repeatable, and order flow to base it by logic. Alright, so first thing is that you need to understand that above every high or low, there is a lot of pending resting liquidity. Why? Because if price went down from this particular area, it means here are many entries of people who like to sell or short at this particular price level, which simply means someone has shorted here, and if someone has also shorted here, that means that person also has some stop losses right above that zone. And if he has some stop losses, there's also possible if there was a veil, there must be some pending orders, imbalances left to be filled. So the logic is pretty simple, that these highs or lows have stop losses or pending orders below or above them. So whenever the price reaches those levels, it gives a beautiful reaction that we can capture. And now if we add ICT into it, now we'll be using ICT for the sweep of liquidity and then a reclaim and then a market structure shift as an entry trigger. So as you can see that this was a drawn liquidity which got swept. Now we'll see a structure shift right here, and that would be our entry trigger. And that's how to understand this basic strategy. All right. So if you see my screen, you will see out that my trading algo simply marks the A liquidity levels and A plus liquidity levels. So A plus liquidity levels are better and stronger than the A liquidity levels in simple terminologies. And you can see that on the right hand side of your chart, after applying this, you won't have to identify the trend anymore. You will simply look at this panel, which automatically identifies the market structure on multiple time frames and helps you identify that whether buyers or sellers are dominating the market. And as you do see that most of the time frames in Bitcoin are currently running bearish, which means there's a higher probability of the price going down. So that simply means that we are only interested in taking shorts. All right. Now, as I just explained to you, right, now you have to just see that there are liquidity levels, and then you have to wait for their sweep and then an entry trigger, and there you enter. So I'll show you an example right away. Now, as you do see that this was an A plus liquidity sweep, all right, so you maybe just mark it up, and then the price sweeps it and reclaims it, and then there was a structure shift, and this all happened on 15-minute time frame. Right now we're on the 4-hour time frame, and that's exactly on the structure shift where you would enter, placing the stop loss below the low, and then you'll be targeting the above draws on liquidities, for example targeting this or this or this. But right now, as we know that we are delivering from an A plus level, we have to target higher liquidities because the potential of the move is pretty higher because of the A plus level. So this could be the first target, then stop loss at break even after 50% out, and then these highs could be your second draws on liquidity as targets, which were also then successfully hit. But now that's not only it, because in 2026 and 2027, trading is not that simple, but very much competitive. So now I'm talking about a secret tool which adds volume in this particular strategy. So as you do see here on the screen, this is the tool I'll be talking about, fixed range volume profile, which you can also find in your trading view when you go around here. There you see. All right, so there is this tool, fixed range volume profile, and the settings will be uploaded inside of the community. All right, you can check them out later once I'm done explaining how the strategy works. So yeah, let's just dive into it. So right now, what you understand, was that you have to find the liquidity and then wait for the liquidity sweep and then a reclaim and then a market structure shift and as an entry trigger. But now we're gonna make it even better, which will boost the win rate, by 80 to 90%. All right. So now what you have to do is just apply this fixed range volume profile tool. And I'm not getting into why these levels work so much in this particular video, but know one thing, that these three levels, value area high, point of control, and value area low, these three levels act as very good supports and resistances, because this is the exact price level where a lot of money was traded, which is only possible by the involvement of the big players, billionaires, foreign institutional investors. So when the price reaches these levels, once again, there's a high probability of the reaction. So now how do we use it? In our confluence is pretty simple. Now, as you do see that the algo shows that here is some liquidity, an A-level liquidity, and by this indicator tool, but given by TradingView, we also see the value area low. So now we know that this zone is a very high probability zone. So you might want to, unless you may want to avoid this trade of this liquidity and wait for this trade, because this is an A plus trade, right? Because we have two pieces of confluence on this level, and when the price approaches, you have to simply wait for a market structure shift, and then that's your entry trigger, targeting the above draws on liquidities. All right, so that's how it works. Now let me show you a live example how you could have used this bagger juicy indicator. All right, so let's imagine that all of this price history has not actually happened. Okay, let's see, let's think that this has not happened, and we also see that this level is an A liquidity level which had been swept. All right, so now I'm going to apply the fixed range volume profile tool from this absolute swing low towards this liquidity level, and now we have the value area low right there, and we also have our A liquidity. So now this zone is a very strong zone of reaction, and then you will also notice that when the price came, taking that low out and then a market structure shift after the reclaim of the level, the price literally boomed off in that particular direction. All right, so that was about this strategy. I hope you learned a lot from this particular video, and instant access to my community, constantly upgrading algos, and more valuable stuff has been dropped below inside of the comment section. And stay blessed, become the best version of yourself, and if I can do it, guys, you can too. That's it for this one. Peace out.